Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. Today's date is May 13th, Friday the 13th. Don't let it bother you. It's okay. It's just a day. And I'm going to talk to you today about managing a trade. It's kind of an adjunct to the video I wrote earlier this week about how the narrow trading range and how we're looking for a break and a movement and extensions. We'll get to that in a second. But before I get into that, I want to preface this whole talk about managing trade with a post that Ryan posted this morning. He titled it, "Who is going to be the last one out of the euro versus US dollar parity door?" Well, the gist of the story is that there's a lot of economists, analysts out there at major banks who are getting out of the idea that the euro versus US dollar will head to parity this year. Things change, okay? And that's the problem with these longer term projections. But as Ryan points out, people want them, so we give them to you. And the thing is that it becomes very difficult to do that sort of thing. In fact, ForexLive did it at the end of the year, and I was in that parity camp. It just made sense, didn't it? But doesn't necessarily mean that it's going to happen. Why? Because things change. Who would have guessed that the U.S. First quarter GDP would be 0.5%? We all expected it to be 2 to 3%, and that would have led to potentially a Fed tightening in the first quarter, 3 or 4 tightenings for the year. We'll be lucky if we get another one this year. In any case, Ryan points out correctly that what's mostly our modus operandi at ForexLive is to look at what's happening now fundamentally, look at what's happening now technically, and make judgments as far as what we expect the market to do in the more near term. After all, it's hard to predict the future, just as these economists. And so the other day I did a video actually about the euro versus US dollar. And one of the things that I look for is very narrow trading ranges. And if we looked at the range for the week, for half of the week going into midday Wednesday, the range was only 61 pips wide. And that is historically low. The lowest trading range that we've seen in the euro versus US dollar going back to 2014, end of 2014, was about 123 pips. We were at 61 midway through the week. And so I speculated that we're going to extend the trading range. And indeed, on that Wednesday, what did we see? We saw the market show some signs of bullishness. We saw the price move above the 100-hour moving average. It's a blue line in this chart. And suddenly we saw a move to the upside. That move to the upside took the price above the high for the week, so we extended the trading range, and we went up to another level right here. This other level is the 200-hour moving average. Now, in my trading, in the way that I look at trading, and the way I think that you should look at trading, is that we have a bias, okay? And the bias turned more bullish when the price moved above the 100-hour moving average. It got even more bullish when the price moved above the prior high. And then we came up to this area right here, and we couldn't get above it. Well, we got above it, but we couldn't stay above it. And so now it becomes a question of, can we go through it and make our way to the next target, which would be the 1465 level, or are we going to fail and start to take back what we just took? And what I mean by that is to take back things like the break above the prior high for the week. That would be not a bullish sign. It would be a more bearish sign for the euro versus US dollar. And so we as traders want to make sure that we see progress in the direction of where we are going. And that can change. That story can change. Just like the fundamental stories can change for the euro going to parity really quickly with the 0.5% GDP growth. And so what we saw was, first off, a battle going on here against the 1419 level, the old high right here. We started to see the traders starting to lean up against that 1419 level. They were still hoping that the price could hold that level and move above the 200, move above the 65 level, and then head to new highs and continue this trend to the upside. I'm convinced of that because that's what we're seeing here. But what happened? Well, what happened was that the price didn't stay above that 114.19 level. We moved below it, and all of a sudden we started to use that area as a resistance level, as a ceiling. So we went from it from being support to now resistance, and that was the key. That was key. The price moved lower, and where do we find support? We found support against this blue line, which represents the 100-bar moving average on the 4-hour chart. We also found support against a trend line here. This trend line connected lows going back to this day right here, to this day right here, to this low right here, and we came down to that level right there. So would you expect to see support against that level? Yes. So in managing the trade, if you were to have gone short right here after failing up there, would you be interested in perhaps buying down here? Well, some traders did, because they leaned against that level, and what happened? The market moved back above the 100, and where do we come up to again? That 14.19 area. So we went from a level of support in managing the trade down here to a level of resistance in managing the trade up at the highs right there. And so there is a battle going on, a battle in between here and a battle in between there. Do you see it? Do you see it? Do you see why I had those levels in? Why I talked about those levels? Good. And so now what happens? Well, we end up getting and trading below that key cluster of support here. And admittedly, right through here, the market had some difficulty. The market traded above and below this cluster of support right through here with the moving averages, trend lines. It's all sorts of things right there. And so, you know, you can see on the hourly bar how we needed to get a close below that area. And as lo and behold, as soon as the price was able to close below that area right here, did we ever trade back above it? No. Why? Traders were leaning. Traders were managing their trade against risk-defining levels. They were trading in the moment. They were looking at this area right here, and I'm sort of convinced that as long as the price remained below this area right here, it would have gone lower. Just like if it would have gone above this area right here, we would have gone higher. But it didn't do that. It did this. And so traders leaned against that level and forced the market to the downside. And trading here today, what did the market do? We fell below another target level. That was the 200-bar moving average on the 4-hour chart. We also moved below the low for the week. We extended the range for the week right there. And note here how the price used the prior low as resistance, managing the trade to the downside. Stay below, stay below, stay below. Everything's okay. The fact that we stayed below was key for the move to the downside here. Got some favorable data to the downside, moved ourselves in that direction, and made a 61 pip trading range something a lot more respectable. In fact, the range this week, if I put our crosshairs up here, go from our high to our low, was not 123, it wasn't 61, it was 164 pips. So we extended the trading range from Wednesday by about 100 pips. For you as a trader, staying in the moment, what you needed to do and what we need to do as traders is to listen to what the price action is saying. Listen to what the tools are telling us. Listen to the bias and the failures and the successes and the leaning against levels. And if we are able to do that, you're going to be a better trader. If you like this video, put the thumbs up. And if you don't like it, put the thumbs down. If you want to post a comment, do that. You can always email me at greg@forexlive.com as well. Love to hear your comments. Finally, if you want to subscribe to our email list, go to the bottom of this post and click on that little box down there that says subscribe to the email. Put your email in there and we'll send you stuff directly to your inbox. My name is Greg Michalowski. Good fortune with your trading and have a great weekend. Bye-bye now.